I think it's important people don't jump into physical metal with intentions of getting wealthy. That's not what it's about.
Silver futures trending down as risk on appetite returns today. Big picture though, like you mentioned, silver is on pace for its fourth straight negative month after hitting its lowest level of the year on Monday.
It will perform very well, but be careful what you wish for. Rising gold and silver price have unintended implications, such as a falling dollar or markets that are falling deep into trouble. And I think that those gold and silver will rise, and I think they will rise higher than anyone thinks possible. The silver squeeze, I think people were buying silver for the wrong reason. Again, I think it's important people don't jump into physical metal with intentions of getting wealthy. That's not what it's about. It will perform very well, but be careful what you wish for. Rising gold and silver price have unintended implications, such as a falling dollar or markets that are falling deep into trouble. And I think that those gold and silver will rise, and I think they will rise higher than anyone thinks possible. But I don't think that you buy gold and silver to get wealthy. And that is what I think a lot of the people who jumped into silver at the beginning of February were looking for, a quick return. And when they saw the volatility in this market, especially to the downside, that all of us who've been in this market long enough have grown to understand, it was a quick turnoff. So we're not seeing the younger demographic rush to buy metal the way that we did in those crazy days, but we're seeing a lot of seasoned investors and their advisors who are finally being confronted with the lack of alternatives. Where do you put your money when you're 75 years old or 80 years old? Do you put it into fixed income earning 1.5% when inflation is running much, much higher? When the Fed chairman just came out and hinted that we see a shift in inflation to not just being transitory, but structural. When you have the head of the Chicago Fed coming out and saying that they need to keep pumping money into the system to raise the public's inflation expectations, they're never going to stop asset purchases. They're never going to normalize their balance sheet, at least not on by their own volition. Maybe the market will dictate that. But the bottom line is that you're seeing people realize this. And these are people who have a lot of money who don't want to lose it. And there's an old saying that I think is very true. It's much, much easier to make money than it is to keep it. And when you look at the alternatives around you, you have gating in money markets. We've talked about that before, Dunnigan, you and I. You have bail-ins in bank accounts. You have next to nothing in terms of reimbursement for the risk that this is carrying. And putting money into equities at really the all-time highs of price to earnings ratios blowing through the roof with nothing in the way of cumulative dividends or fixed income. But really the lowest rate in the history of this country by and large, with inflation running many times what that interest rate is. And we've talked about how the numbers that the CPI show us are roughly half of what John Williams and Shadow Stats tells us they really are. So the alternatives, I think people are finally having no choice but to be honest with themselves. And the alternatives are few and far between. And because of that, we're seeing substantial orders from seasoned investors who have never purchased metal before. To me, that's the difference, where in February it was craziness, let's make a profit, let's get silver and watch it go through the moon, to people looking for a means to protect what they've worked so hard to obtain their whole lives, not in an effort to get wealthy, but to be able to have something to pass on and to weather whatever financial storm.
Yeah, you mentioned preservation of purchasing power there. One of the things you mentioned just in passing earlier, I wanted to really underscore, we interviewed the head of the Privacy Journal, which is the oldest journal on privacy in the United States, talking about what is the value to each of us of our privacy. A lot of us have unintentionally given away most of our privacy a little tiny bit at a time for opting into this or that or the other, for some 1% off here or 2% off there, or cheaper tolls on the highway when you're letting yourself be scanned and tracked or whatever, using the card because it's quicker than using cash sometimes at checkout points and point of sale. But that slippery slope fallacy, I know these guys studied logic and philosophy, so they're going to give me a hard time. But I'm going to challenge that in the real world where we live, the slippery slope often plays out in the political realm. And we saw first the $10,000 cash transaction ban, and then we saw this the taking out of circulation, I think before that, of $1,000 bills, and then the $500 bills. Now we're down to just the $100 bills and smaller, besides the devaluation of the currency. So making cash more and more difficult to accomplish meaningful things with. But now with this announcement from the banking, the part of the tax bill, part of the new administration's tax bill, saying that any transaction over 600, so you go from a $10,000 cash transaction being something that's heavily monitored and traced to any transaction over $600 and over being traceable. And that's just, what's that? That's arbitrary. That's on its way down to every transaction being traceable, complete loss of privacy. And for those folks who shrug their shoulders and go, so what, why do you want your privacy? Maybe it doesn't hit them the same way, but many people that reach out to us are concerned about preserving and protecting their privacy.
Mm-hmm. Let me explain it to the way that I look at it. I look at it from a perspective of, I've seen this before. So my business started in the early 90s as a representative BFI consultant. Wonderful, wonderful people in Zurich, Switzerland. And for people wanting to buy Swiss investments, they're the greatest. And so we had a lot of clients who were invested with Union Bank of Switzerland and Credit Suisse in particular, amongst other banks, but I'll use them as for this example. When FATCA came about, Form 8938, I think that's what it is, 8938, FATCA, the IRS form that basically wants to know if you have anything outside the country in terms of financial asset. The government first, before they rolled it out to the public, went to the institutions like Credit Suisse and UBS and said, some to the extent of, you have 90 days to give us all of the names of the US people who have accounts with you, because we fear that many of these people are not paying taxes. UBS and Credit Suisse has assets here in the US, and they were told they would be frozen if they didn't comply. So UBS and Credit Suisse, instead of complying, they told the Americans, you have 30 days to close your account or we will turn your name over to the IRS. So they start with the institutions. And then after the institutions have started to give up this information, they issued a period of amnesty. You have 30 days to come clean, basically, and work out a deal with us or else. And so what I'm getting at here is you see the government going to the institutions all the way down to Venmo and PayPal, where they all have to tell anything that comes in and out of any particular account. And so it's going to start there, and then it will move down to some sort of reporting requirement here by the actual taxpayer, the way that it did with FATCA, where if you have anything offshore, you have to report it, and it's separate from your 1040 form. So I guess the point is that they're starting from the top on down. They're closing the window in terms of any financial privacy. Whether you don't have anything to hide or not, you should be concerned for the erosion of privacy. That, that's what this country was, one of the principles this country was founded upon. And it's a direct violation of the Fourth Amendment. It's frightening, because it doesn't just stop here. And where does it ultimately lead to? And I think this is driving a lot of people into maybe expediting their decision making into adding something before these legislations are passed.